Friday 9th of January, 8:40 in the morning. So we're looking at last night's close. This report is pre-market open. As usual, we're looking at the May contract 2015, and we've got the monthly continuation chart in front of us. We start there, and you can see here that December we had this green candle here, but we had high wicks both sides of it, so a sign of indecision. We failed to break through this major resistance here at 140, which was a low back in 2011. High was 148, low was 131, close 138, and the range was 16 pound a tonne. We've got this falling trend line here, which has been in place for the last 2 years, and we're knocking our head against it at the present moment and failing to break through. Support comes in here at five monthly moving average down here 130, and we're still we still are maintaining a sort of three month upwards trend against a 2 month yearly falling trend. So as usual, we'll pop down into the weekly time frame. Weekly time frame here, you can see here this 140 again. Got this falling trend line here from the last 2 years, and obviously we've got this short-term trend line of the last 3 months where we've had this rise in the market. You can see this, we're hitting our head against this both here, and something needs to break. Support on this chart comes in here at 20 weekly moving average at 128. The RSI is just holding above the 50 at the present moment. So we'll drop down into the daily chart. Daily chart here, I've got my regional count here of the Elliott wave. We started in 26th September, 1, 2, 3, 4, 5, which was completed in the last half of December. I've got a larger wave count here, which is outlined with Roman numerals. I can see a 1, which takes us up to here, the end of October, 2, 3, and we're in a possible 4 at the moment, or an ABC correction of my original 1, 2, 3, 4, 5 count starting on 26th December. So basically we're in a wave 4, which is a consolidation wave against an upturn short-term trend, 3 months trend. Where would I expect price to fall back to? Within this sort of green circle here, somewhere down, probably come down and test this 60-day moving average, which has held this trend for the last 3 months. Time-wise, I've done a time Fibonacci projection here. We should see a low come in about the 27th of January, probably towards the end of this month. So at the moment, we've got a long-term trend downwards, but we've had this short-term correction upwards. On our long-term plan, obviously, the longer term, if we go for this, my blue numbers here, we've still got a 5th wave to come, which would take us up to, my count would be sort of up to 173. So obviously, all not over, but obviously we need to see some action in January to keep this trend in place and not slip back below this 60-day moving average. I'll just pop down finally and just show you on a 2 monthly chart here. You can see last time we had this forwards being in December, and then the short-term trend line here, and then we broke through back up again above the 20-day moving average. You can see here we're doing exactly the same here. We're having a consolidation phase, wave 4 phase at the present moment. This is where I would expect prices to fall back. So if you're looking to sell in the short term, we've probably got another £4 to £5 on the downside, and then we should see support to kick in to take us to have another go at this high again. But obviously any day that we see a close above 140, that means we're on the way again upwards. But obviously if we don't find support of the 60-day moving average, and that's taken out on the daily close, then that starts alarm bells that on a long-term plan that we're slipping into a sideways motion pattern, which could be not good for the next 2 years. So obviously we want to get some movement going in January and first half of February to see this market get its legs on again. And I'll put an update this time next week. Thanks for watching.